Why, good morning, everybody. I hope that everyone is doing good. There is a chat option and it might be turned off. Let me see. If somebody could use the chat option and let me know that you can hear me okay. Yeah, Holly can hear me. Wonderful. I hope you're doing well, Holly. It's a cold day where I'm at, probably cold across most of Pennsylvania. If you happen to see me looking off to one side or the other, I have a computer screen, a second one beside me. So I keep track of notes and such over here. I'm going to um, just move this over here just a second. Okay, so we're going to get started because we have a short period of time to talk a lot about taxes. My name is Corey. Of course, this is Tax Talk with Corey. I'm from the Small Business Development Center at PennWest Clarion SBDC. And today we're going to talk about taxes, and hopefully you have some questions that you would like to ask me. We're going to start off first with talking about tax return extensions. Should I file an extension? So, all of us have, as individuals and as sole proprietorships and as LLC sole proprietorships, we have until April 15th to file our tax return. If you are an S corporation, you have until March 15th. If you are a partnership, I believe you have until April 15th as well. Now I just drew a blank on that one, but I think it's April 15th as well. Anyhow, if you have a business currently, you probably know when your deadline is. So then the question is should I file an extension to obtain another 6 months to file my tax return? You can do that. There is no charge from the government to file an extension for your tax return, whether it be an individual tax return or a business or a combination of both. And it normally is a combination of both. Even if you have an S corporation, you cannot file your personal tax return until your S corp is officially filed. Then you file your personal tax return. If you're a sole proprietorship, then the form that your business is on is what we call a Schedule C. That's already a part of your 1040 individual income tax return. So your 1040 is like 2 pages long, and then you have other pages after that. And some of them are called schedules. There's Schedule 1, Schedule 2, Schedule 3. Oh, and by the way, there's Schedule A, B, C, D, E, F. So there's a bunch of different schedules. Schedule C is where your sole proprietor shows up. If any of you have residential rentals, then your residential rentals and other rentals that you might have show up on a Schedule E if you're just operating as a sole proprietorship. So it doesn't cost anything from the government to file an extension, although from your tax preparer, they may charge you a fee to do an extension. I have seen that happen where accountants will charge a fee because you are extending their work as well beyond the tax season. So they're going to charge you extra. Sometimes, maybe not you, but sometimes people that do extensions are just automatically late people. Okay. And what I mean by that, and again, I don't know if it's any of you, so please know that I'm not picking on you specifically. But what I have seen over time is the people that file late are normally procrastinators and they cause headaches a lot of times for people, for accountants that are trying to wrap up tax returns. They don't want them hanging over their head for a long time, and so it takes work trying to get information out of the procrastinator tax payer to get that information so that they can officially file their tax return. So I'm not saying all accountants charge extra for it, but it is something that they might charge. Um, Here is the catch that a lot of people don't understand that I want to stress to you today. That's why I made it as today's tax tip is that the although the extension does not cost anything from the government to file and doesn't cost you anything, to wait for 6 more months. That does not give you an extension of time to pay if you're someone that normally pays in to the federal, state, or local government. So you can get a free extension, but if you owe money and you don't end up paying that money until your tax return's literally filed, and maybe that's in September of this year, you will get penalized and have to pay interest to the government for not paying them by April 15th, when the payment is actually due. So sometimes when you file an extension, your accountant will ask you, do you want to send any money in with the extension? Because the idea is send in as much as you can, as much as you think you're going to owe, so that you're not being hit with as much in penalty and interest later on. Maybe send in more than what you think you'll owe, so that you'll get a refund when you file your tax return later on. That's what I really want to stress to you. Most people does not understand that. The other thing to think about, although an extension is easy to do, and the government doesn't charge you anything, do know that there is an opportunity or a possibility that a red flag may be raised for extensions. So in my thought, I like to file tax returns on time, get them done and wrapped up with before the true deadline of, say, April 15th for sole proprietorships. Anything after that, I just always feel like that is just one of many different little red flags that could go up, and that it could cause you to be audited. And if you think what I said about procrastinators, the IRS may look at it as, yeah, these are the type of people I want to audit, because these people, may not be as well organized. They may be trying to finagle numbers so that they're not paying into us. And so I just have always felt over the years that that's just a red flag automatically. Okay. So that is what I wanted to share with you about extensions. It wasn't a whole lot. I know sometimes when I do my tax tips, I talk for a while. This one was a pretty short and sweet one that I wanted to make sure that you all understood. So as we get ready to go into the Q&A session, if this is your first time here with us today, although some of you, I recognize the names, you come back month after month because it's either you like me or you like the information we talk about. I'm going to assume that it's the information that we talk about. What this session is until 12 o'clock is we went over a tax tip where I spoke to you. Now I'm going to give you the opportunity to speak to me. You'll be able to unmute yourself, and or if you do not have a microphone, you'll be able to type within the chat. And what you're talking about are questions that you have. We don't know each other. You're from all over the state of Pennsylvania, probably, might even be from another bordering state. And so feel free to ask your question. I'm not going to ask for any kind of personal information from you, but this is your opportunity to try to get some questions answered uh, based on the information that I received from you. So with that said, I do want to read a quick little piece of fine print to today's Q&A. Any tax advice reflects our professional judgment based on our understanding of the facts provided to us and on current tax law. The SBDC is not responsible for misinformation, as this is a service offered at no charge to entrepreneurs and business owners. So with that said, again, just to kind of put it in my language, is that this is something offered to you at no charge. I am not gathering nearly as much information as your accountant would be gathering from you, because you get a chance to ask a question. We're not going to dive in deep. I'm not giving one person here an entire hour of my time. you get a few minutes of my time. And so I'll try to answer the question to the best that I can, lead you down a direction if I feel that that's what's needed to go talk to your accountant or talk to your SBDC consultant or somebody else, depending on how the conversation goes. So I did mention other SBDC consultants. You may be from across the state. I'm assuming already that you're working with an SBDC. If not, get hooked up with an SBDC. There are 15 SBDCs across the state of Pennsylvania, and we all have our like little own territories. So if you're from Philadelphia, you're not going to be working with me. You're going to work with your local SBDC. And I always suggest that you talk to them about questions after today, see if they can answer your tax related questions that may have come out of today's conversation. If not, then a lot of them end up referring you to me if you're signed up as an SBDC client and have me try to help you, or another person with accounting tax background like myself. Okay, so we're going to get into this here. The first person that was in, and I lost track already, once I started talking, but I have the top 5 people that came in. So let's see here. And I do apologize if I mispronounce anybody's name today. Please don't take offense to that. But Cyril, Cyril, if you're able to unmute yourself, go ahead and unmute yourself and ask your question. While we're waiting for this person, again, if you don't have a microphone, use the chat option. Okay, go ahead.
All right, good afternoon. Good morning.
Good morning. Still there? Uh-oh.
Are we okay?
Yes, I hear you now.
All right, Cyril calling from Maryland.
Okay, what can I help you out with today?
Yeah, I wish to inquire something. If you have a new business that is just registered, let me say about 3 weeks ago, are you obliged to file, or should I extend?
Okay, you blanked out on me there. I caught that you just started a business
Just registered
recently.
business. Yeah, 3 weeks ago, like 3 weeks ago, I got the paperwork. So am I obliged to file or to extend?
Okay, so if you just started a business 2 weeks ago, that means you started in 2025. So if you're filing a tax return here, then you're not required to file a tax return until next year at this time. If that answers your question. If you just started it in 2025, you don't file a 2025 tax return until the beginning of 2026.
Okay, the next question is very brief. If you file for an extension, that is, if you have an S corp, you file for an extension, that will be September. So it implies that, like, let me say in July, may file in July or in August. Is that okay?
Okay, I'm gonna have to have you repeat that because you said about your S corporation file an extension and the last 2 words I heard was implies that.
Okay, I'm sorry, I don't know why it's wrong. All right, if you have an S corp and you file for an extension, within the 6 months period, it shows that you have to file your taxes within the 6 months period, which means that by July, August, you can still file, or maybe January, February, March, April, you can still file, right?
Hmm. So again, breaking in and out here, but I'm trying to follow you. I'm not sure what you're talking about. A 6 month. There's a 6 month extension. So if your S corp is due March 15th, then yes, you have 6 months to file your tax return anywhere in between that time period.
Okay, thank you. That's all. That's all I needed to know.
Okay, sorry about that. We're just breaking up there, and I'm not sure if it's you or me. We'll find out when the next person starts to talk here. So I do
And
apologize.
it's okay.
Okay, so we're going to move on to the next person here. It looks like Lori, Lori Cole. Lori Cole. If you're able to unmute yourself. Okay. While I see, I'm looking at my, okay. So if okay, there's Lori up there. Lori, if you're able to unmute yourself, go ahead. And while I wait to see if she can, I'm going to run over here to the chat side. Chat says from Jasper, salutations from Second Chances and then a Benefit Corp, Portland, Oregon, Portland, or has become a cesspool of Bella. Okay, I don't know what that stands for. So I'm going to move on. Cheryl, I'm going to go to Cheryl real quick. Spouse works for a Fortune 100 company and works from home 3 to 4 days a week. Can we deduct his workspace on personal taxes? So spouse works for a Fortune 100 company. That means that spouse receives a W-2. And if the uh, if the job, it sounds like, is a work from home type of business, um, or type of employment. And assuming that the Fortune 100 business is far away, is not like right in town where you work at, then it's my understanding that yes, you do get to deduct a home office expense if you have a home office area in your house. Now, with that said, on the federal tax return, there is no unreimbursed employee business expenses. There is none of those on the federal tax return, but it is on your state and your local. So I hope that gives you a little bit of, questions about that on your personal tax return, working as a W-2 employee. Okay, so Lori did not unmute. So what about David Rodriguez? Hey, David.
Hello, I actually just was about to send it in chat, but I'll say it. Just as a sole proprietor, I've been holding on to a space. I mean, I got a really good deal. It's like a 2,500 square foot storefront for 1,100 a month. Um, and I've been doing work out of there and just building it to launch a studio this year, actually this month. Am I able to write that off as a sole proprietor since it's technically a commercial space I've been paying for myself?
And you started using it in 2024?
Yeah, I have a
Okay.
full loft in there.
Okay. Yeah. So yes, you're basically in that startup stage and you are incurring expenses. So if you do see a reality that you're going to be opening your business, which you must if you're currently using that space, then yes, you can file a tax return. You do not have to have sales. The way that role works is you either have to have income or expense to file a sole proprietorship business tax return. You don't even have to have a business name. You do not have to have an EIN number. You don't have to have a sales tax license number. You just use your own personal name and your home address for the time being as the business, and go ahead and file those expenses if possible. Now, I will warn you, because I just seen this the other day, that if you continue on for too many years with no expense, with no income but all expenses, then the IRS can turn around and disallow those expenses for a number of years in the past. So, but again, from what you're talking about, it sounds like you're going to start generating income probably this year, by the end of this year. So that's good. Yes, you can claim that on your tax return.
Okay. Yeah, I already generate income. I'm a photographer and it's turning into a photography studio. I just use it for storage and for work now, and it's going to be expanded as a pet photography studio this month.
Oh yeah, yeah, definitely. You can write that off on your taxes for sure.
Okay, awesome.
Okay,
Thank you.
good. You're welcome. Okay, next is Holly Warren. Do you have any questions, Holly?
Oh, okay. There's the unmute button. You do it on your end now. I just sent it on the chat that I got my taxes done early because that was part of, I think, your December talk that you said to do. So that's a relief. So yeah, do it early if you can.
Yeah, and exactly like Holly said, sorry, I was looking at another name there. As Holly said, it's a relief to get it done. I never understand why people do extensions. And what I have seen in the past is someone that does an extension, they come in like right at the end of tax season, be like, oh, I need to get an extension. I'm not ready to get my taxes done. And then they get the extension and now the the end of that extended period comes around and they're rustling around again. Oh, I got to get my extension in done. I got to get my extension or I got to get my tax return done. And it's like you just cause yourself so much stress. You just need to get your tax return filed as quickly as possible. Then it's one less thing to worry about. Any other questions, Holly?
No, that's all. Thanks, Corey.
You're welcome. Take care.
Mhm.
Okay, next up, let's see here what I had on my list here. Jasper Goldhart.
Yes, I just have a couple of questions as I put in the chat, nothing new. If I heard right with the other person, if I'm starting my business this month or next month, I don't have to file taxes until 26. Is that true?
That is true. Yes, you're always waiting until the end of the year to file your business tax return.
Okay, great. The other is my tax responsibility. I have quite a few virtual classes, and I'm wondering what my responsibility is to charge things like sales tax and whatever taxes the municipality charges. Or can I just put that off on them with a disclaimer on each of the virtual classes that the viewer is responsible for paying all taxes? Because how am I going to deal with 52 states, tax codes, and then a billion different municipalities and cities and all that? It's ridiculous.
Mhm. Yeah, great information. And I was actually going to talk about some other taxes um, once, even like before you continued on there. So you bring up something good. We're talking, you know, at the beginning there, my answer to you was talking about income taxes. So if you just started your business in 2026, then you do not need to file your income tax return with the federal, state, and local government until between January and April 15th of 2026. It's always like the first quarter,
Right.
excuse me, after the year. However, there can be some other taxes that you may need to file. And so those can be sales tax because sales tax are due on a quarterly basis. Sometimes for some businesses, it's a monthly basis. Other times it's a semi-annual basis. And then if you ever have employees, then your employees, they get a paycheck, every week, every 2 weeks, something like that. And so you have to pay into those payroll taxes throughout the year as well. So to answer your question specifically with sales tax, if you're offering virtual classes, I would have to look that up to verify because I don't have memorized every single industry out there, but I don't think virtual classes are subject to sales tax in the state of Pennsylvania unless, or I shouldn't say, I still don't think they're taxable, but if you're selling books or selling other merchandise that are normally taxable products, then then you do have to charge sales tax on those taxable products. Your thought about passing off a disclaimer to the buyer if they're buying a taxable product from you is that they're responsible for it. So if you're selling it to someone in Pennsylvania, you as the seller are responsible for collecting the sales tax from somebody in Pennsylvania buying a taxable product from you. If you're selling it to someone out of state, then yes, you do have to know those rules for all of those states. And that's what makes it really hard for a small business to sell products over into other states. However, the general rule is that if you are selling a taxable product to someone outside of Pennsylvania, you do not charge them sales tax. they are ultimately responsible for a tax in their own state. Normally that's called a use tax, and it's of a same percentage as their sales tax. With that said, if your business grows to be really big and you're selling a lot of stuff across the country, every state does have a threshold that if you sell more than X number of dollars of taxable products into that state, then you do have to charge sales tax.
No, I don't
So
have any products. It's just the virtual classes.
and okay, well, that's good to know. So I went beyond what you're even talking about, and so yeah, but you may get to that point as well because I go to a lot of classes where they are selling a manual or a book. But if you're just doing a virtual class, then
Right.
at least in the state of Pennsylvania, to my understanding, it's not sales taxable. However, you are asking a good question because I don't know all the other states, so you would have to find that out before you
How?
um start searching. You'd have to go on to every state's website. The part like
Oh, you're kidding me.
it's either that or you work through a bigger website organization that knows sales tax. So I know you're doing a virtual class, so this is different because I don't clearly have an answer for you on this. But if you were selling a product and you sold through Amazon or sold through Etsy or Airbnb, if you had a rental or something, then when you sell through them big conglomerate websites, they know the sales tax for every state, so they take care of sales tax for you. But if you're doing it individually on a really small scale, either your local accountant might know the answer, or be able to get you the answer. Talk to your local SBDC. Maybe they have a resource. I don't. I can tell you that. I myself don't have a resource. And so if your local SBDC has a resource to find that out, that would be beneficial for all of us. Otherwise, you just have to go to like you'd go to the Pennsylvania Department of Revenue, you'd have to go to the Ohio Department of Revenue and the California Department of Revenue and do all that research. Okay.
I think
Okay.
I'd rather hire a tax attorney to advise me on this.
Oh, absolutely. Yeah. You're going to have to pay somebody. You're probably going to have to pay somebody to answer that question because I have always told people that when you are dealing with selling stuff across state lines, you're getting into a monster. Yes.
Yeah.
Okay. Thank you,
Thank you.
Jasper. Okay, let me see here. I'm going to go over to a chat. Natalie is saying, first words, get ready. This is totally off topic. Okay, let's see where we're going here. But I'm hoping you can answer this question. I am converting my LLC to an S corporation. I was advised by an accountant to submit forms 8832 and 2553. Hey, this is right on topic, by the way. Any kind of tax related questions or business related questions, right on topic today. I read the instructions on both forms and it didn't make sense to me. Yeah, a lot of times that's from the government. Form 8832 seems to be electing for me to change my current classification to a corporation. But my understanding of an S Corp is that it's an LLC structure taxed as a corporation. I believe that only Form 2553 is required. Am I correct? Okay, let me check something out here. Yes, you should be correct. From my understanding, you just need to complete Form 2553. I was looking up that form. I was pretty sure I knew what it was, but just want to make sure I wasn't getting it wrong. Um, so that is all that you should have to file. Now, with that said, if you reach out to your local SBDC that you're working with and you ask them if they can get you connected with the Penn State Law Clinic. So this goes for everybody here. The Penn State Law Clinic is another organization that offers a service to you at no charge. You go through the SBDC to get connected to them because we would send out a link to you as a client of ours. And it is a group of law professors, they're acting attorneys that have law students working underneath them, and they help entrepreneurs form LLCs, as well as, becoming an LLC tax like an S corporation. They also can assist with getting your sales tax license, your fictitious name, your EIN. They can help review contracts with you. And it's such a great service because you are helping law students gain real world experience. So I hope you took note of that. Reach out to your local SBDC, ask them to get you connected with the Penn State Law Clinic, and that law clinic will actually help you and make sure that you go through these steps properly. Okay. I'm going to come back over to someone that can unmute themselves. Let me see here. Okay, how about Andrea Brown? Andrea Brown, if you have a question. No question. Okay. Next up is Disna, Disna. If you're able to unmute yourself, go right ahead.
Hi, can you hear me?
Yes, I can.
Okay, I have a PLLC which is brand new, 3 months old, and I am saving my income in my business account. I have a legal service, so I have two separate accounts, IOLA account as well as the business account. So I'm saving all my income in the business account, but I do not know when to withdraw a salary from it, and do I have to wait for a while? I haven't done anything, and how to do that?
Okay. And you said that you're an LLC, is that correct?
PLLC.
The LLC. Okay. So, with an LLC and then within a PLLC, for those of you that are kind of familiar with an LLC, that's a limited liability company. A PLLC is a professional limited liability company. PLLCs are reserved for those that have to have specific licenses through the states they operate in, such as an attorney, an accountant, a certain type of accountant like CPAs, and some other types of professional LLCs, or professionals will have to have a PLLC. So with either one of those, PLLC or regular LLC, you do not receive a paycheck from your business as if you worked for, well, we all know Walmart, right? If you worked for Walmart, you would get a paycheck from them. So you're not going to get a paycheck. You're going to take what we call withdrawals. And ultimately, that is taking your business checking account and writing your name on the check and a dollar amount and signing it. And then in the memo, you might want to write, withdrawal, owner withdrawal, member withdrawal, something like that, and take it to the bank and cash it. And you run away with that money because that's your money. Now, the big question is, well, how do I pay my taxes? Because I mean, if I work for Walmart and I get a paycheck from Walmart, I have taxes withheld out of my paycheck, but you're telling me to write a check and go to the bank and not pay any taxes? That is correct, because your taxes will be paid at the end of the year when you file your income tax return for the business. And when you get to a point of that you're owing too much money to the government because your business is doing well, then you'll have to start sending in what we call estimated quarterly estimated vouchers. You can flip-flop those words either way. And so your accountant, whoever's helping you with your tax return, they should talk to you and help analyze your tax return and find out what you feel your sales are going to be in order to calculate properly the right amount of estimated quarterly payments that you should make. So you do
So
not
is there
get
a
a paycheck.
limit? Is there a
What's that?
limit to have like certain amount that I have exceeded to send these quarterly estimated vouchers to the government?
Is there a limit as in too much money you can send in?
No. What I'm asking is there a ceiling like 10,000, 15,000? Once it exceed, I have to send, or just in the beginning, after 4 months, I have to send the quarterly estimated vouchers?
So if I'm understanding you correctly, I mean, and again, that's where your accountant would come into play, the person that's doing your tax return for you
Yeah.
is let's say, so you just start, well, let's hold on. You just started your business this year. So
Mhm,
so it it would be good to sit down with an accountant at the end of March, January, February, March, or you know, assuming because you already started this quarter. So at the end of March, beginning of April,
mhm,
it'd be good to sit down with your accountant and say, here's what my income is for this year. Here is what my expenses are so far in this quarter, first quarter.
mhm,
And if you have a profit at the end of the year, if you're showing or end of the quarter, sorry, and you're showing a positive number, then your accountant who's already done your tax return for you, like your personal tax return, they
mhm.
should be able to give you an idea of how much you should send in on a quarterly basis to the federal, state, and local government that you're located at. And then you might want to do that every quarter for this first year. So April, May, June. So beginning of July, you might want to have a standing meeting with your accountant, and then
Mhm,
the next quarter and the next quarter. Once you get a full year under your belt of meeting with your accountant on a quarterly basis,
mhm.
then you should just be able to meet with them at during tax season at the beginning of each year for them to give you an idea of how much you should send in for all 4 quarters. And then what they'll do is they'll give you 4 vouchers, 4 pieces of paper, and they'll tell you send in these pieces of paper, one for each quarter,
Mhm.
throughout the year, and then come tax time, you should be sitting okay.
Okay, so if your answer, would it be changed if I say that for IRS purposes, I have LLC, one owner LLC, so I'm filing taxes with my personal. Would that answer change then, or it's the same?
It's basically the same, yes, because if it's
Okay.
because an LLC is going to be filed with your personal, and therefore your accountant that you normally go to is going to be looking
Mhm.
at that whole big picture for you to try
Okay.
to try to give you the best dollar amount that you should send in on a quarterly basis. Yes.
Okay, thank you so
Okay.
much. This is very helpful.
Good. Wonderful. Okay, I'm going to go ahead and mute you, and I'm going to run over here to chat and see what I got going on over here. Let's see here. David, I think I answered your question. Yes. Okay. Holly, Jerome. I added my question in the Q&A section because I did not see the option to unmute myself. Okay, just a second here. Here's the Q&A. Got 2 of them popped up now. Okay. So Jerome Johnson, let me go to you. Okay. So I lost my 501c3 status and am awaiting reinstatement. My question is, should I file my taxes now? Second question is, where do I pull the 990 form from? Okay. So one, I'm going to say this is the SBDC. We're not organized to assist nonprofit organizations. We mostly help for-profits. So I'm not a professional. I don't know a lot about nonprofits. So you're saying, should I file my taxes now? You must be talking about your nonprofit tax return, which is the Form 990. And you're asking where to pull it from. I would go to the internet, like Google, and I would do a search for IRS Form 990, and a PDF should come up automatically. If 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 you're doing it for 2024 and it's all zeros, you should be able to probably do it yourself. And there is a very simple method. I'd have to look it up again, but if you have under a certain amount of revenue, I believe, then you just file what they call a postcard, some sort of nonprofit postcard, and it's really simple to do, and you probably could figure it out on yourself. Otherwise, you may need to reach out to an accountant for that. Um, let's see here. And Jerome, I just gave you the opportunity to unmute yourself if you'd like to. Are you there, Jerome? No. Okay. So hopefully I answered your question. Again, I'm not real expertise on that. I mean, if it hasn't been reinstated and you're asking whether to file it or not, I mean, I would say no, because if it's not reinstated, then it's not in existence. The government is my thought. So you would not file um a tax return. Okay, let's see who's next here. How about Ellen Dillon? Ellen Dillon. And I do apologize if you have it in the chat or the Q&A. I'm trying to cover it all, so I don't see Ellen Dillon chatting with me. But Ellen, do you have a question? You want to unmute yourself? Okay, I'm going to go over to the chat here. Okay. This Jasper made a statement here that I think is good. Says, be very careful with workspace area. IRS will audit you in person if they think you're lying. Absolutely. I mean, if we're going to be good people, we shouldn't lie. I know we make lying so easy in our life today. However, let's just be a good person. Let's just do things right. And so it is, yeah, be careful with these home office expenses. Be careful with any type of, like this W-2 person that was talking, that had a question earlier, in what we call your unreimbursed employee business expenses. The government loves to audit those. That's an automatic red flag right there just for filing it. So you better have receipts, you better have things documented, but that goes with anything with any business. If you put something on your tax return, it is open to audit now. So you're writing off all these different expenses and you're wondering whether it's a personal expense mixed in with your business. You better be careful, because yes, you can get audited and they have a right to look at everything dealing with your business. So thank you for sharing that. Okay, I think I got through all the questions. What time is it? 11:42. Anyone else have any questions for me? Let me find someone else to unmute here. John Thomas, do you have any questions, John?
No questions at this time. Thank you.
You're welcome. Okay, Paula Boyer. Do you have any questions, Paula? And I'm going to go ahead and click on Natalie. If you're able to unmute yourself, Natalie, feel free to.
Hi, I previously asked my question, so thank you very much. I was the one inquiring about Form 2553.
Oh, okay. Yes, yes. Okay, good. Thank you. Thank you. Okay, let me see if I see any others here. If I missed anyone, raise your hand and I'll be glad to unmute you, because I went through the list of everybody here. I think I went through all your questions as well. So, see. And oops, 1 second here. Nope. Okay. I'll look for a hand that, either use the chat button or the Q&A. I have it open. Or in Zoom here, there is an option to raise your hand as well. So feel free to raise your hand and that'll get my attention. Again, this is open Q&A for anybody to ask their questions. Normally I'm running a little bit over with people that have questions. So sometimes we just don't know what questions to ask. So I'm going to talk until I see if somebody has a question here. Okay, well, someone does have a question. So with an LLC, is it even an option to issue normal payroll to members, which are the owners of the business? No, it's not an option. If you do issue payroll to owners of the business, then you are doing it incorrectly. Will they fine you, or will they fine you for doing so? Probably not, but you would actually end up paying more taxes than you should. Here's the reason why. An LLC, sole proprietorship, or an LLC partnership that takes withdrawals out of their business. That's how they pay themselves, as I mentioned, writing your name on that check. You do not pay into state or federal unemployment compensation tax. But if you cut yourself a paycheck, then you're going to be setting yourself up for unemployment and unemployment compensation tax. And you don't want to do that because you wouldn't be eligible for it. Now, if you're going to be an LLC taxed like an S corporation, there was somebody that asked that, maybe that was you, an LLC taxed like an S corporation. No, that was Natalie. Then you do have to give yourself a paycheck. And you do have to receive that paycheck and pay unemployment compensation tax on top of all the other taxes that are part of receiving a paycheck as an S corporation. So as an S corporation, it's just like working for Walmart. You get a paycheck in that direction. Good question. Any other questions? When you're thinking about writing off expenses, do ask yourself, is it a business related expense? People will ask me, can I write this off? Can I write that off? My response is, if it's business expense, if it's business related, you'll know if it is, then it's a business expense. But if you have to think about it because, is it personal? Is it business? Then yeah, there's a good chance that it's maybe personal and you're just trying to find a way to hide it in there. There are some totally legitimate ways to get maybe what we would say a little bit of personal benefit out of a business expense. Maybe even like traveling. If you're going to a conference in another state and you're going to be at that conference or that convention for a few days, your airline ticket out and back would be deductible. Your hotel stay would be deductible. So now you say, I'm going to go to this convention, and it's a 3-day convention, but I would love to stay there for vacation as well. And I'm going to stay there another, say, 3 days. So 3 days for conference, 3 days for vacation. Now you cannot write off your hotel stay for all of those days, just the nights before and after and throughout and after the convention. Your airline ticket is still able to be written off because you got to get out there and get back there. If you have a rental vehicle, again, during that period of work, you can write off that rental vehicle. So there you see where you can get some of your expenses partially paid for by the business, and then the other portion of your trip, which is your vacation, is going to have to come out of your own personal pocket. Don't put that on your tax return. And because if you get audited, then you're going to get in trouble. Any questions? Now, we did hear some time ago how, the IRS received X number of dollars from the government to hire X number of employees, and they were going to start auditing, businesses more. I don't think that they really ever started auditing a whole lot more businesses. What they were doing was putting so much money into the IRS to hire people because so many people are retiring over the next several years. So they need to hire people to fill that void. So all in all, they really were not growing when they were given X number of dollars from the president to what we were told they were going to expand, and that's not really what they were doing. Now, the government has taken money away from the IRS again. So if anything, they're going to probably keep shrinking down to a certain point. Not sure how much they'll shrink, but at least to a certain point. Any other questions? We still have about 10 minutes, so put your questions out there, people. How often do you get these types of free services? As I always mention, make sure you work with your local SBDC. They can answer some questions as well. If you're not sure what your SBDC does, they offer business planning for those that are looking to start a business. If you're already in business, they are more than glad to sit with you and talk with you and answer your questions and help you brainstorm new ideas. We offer marketing, we offer human resource assistance. We can review your website and give you an analysis on search engine optimization. We can help you find low interest financing if you're looking for a loan. There's even some grant money out there. If there's anyone here that is an artist, and that can be different types of industries, of course, art as you think of art, but also marketing businesses fit into that, as does architecture fit into that. And so there is a $2,000 grant that you could be eligible for in Pennsylvania if you fit into the criteria for this particular grant dealing with the art industry. So reach out to your local SBDC and see if you're eligible for it and apply for that $2,000 if you could use it. Okay, Jasper, go ahead and unmute yourself.
Okay, I thought about what you said, and I think what I am going to do in the beginning is put a tax disclaimer, like I said, in all the classes and workshops. And after a little time where I get some money, then I'll just go to a regular tax attorney professional and see what we can do. Because you're talking about, I mean, a titanic amount of effort to learn every single tax. I mean, municipalities in one area may charge me, 1.5% for the class, in another 1,600, 1,000. Nobody will charge me anything. I mean, it's a ridiculous requirement to put on somebody, especially a small business, to say, hey, you have to know everything. I mean, that's ridiculous. It's
Yeah.
I mean, it's
Do you have a
Herculean task at the very least.
Do you have a website, Jasper?
Not yet.
Okay. So some websites, when you develop websites through if you use like GoDaddy or Wix or one of them, some of
Actually, I
them.
was thinking of using GoDaddy.
Okay, so check into it. They may have a sales tax generator where they know the sales tax for all the states already because they're such a
Oh,
big
really?
company. They might. I'm just saying to look into it. Because even if you built your website from like total scratch using WordPress, which is a different type of web development, I think there are different programs that you can put into your website that knows sales tax across the country. So look into that as well. There has to be something out there. Talk to your local SBDC consultant and ask them, is there a software out there that I can use that will tell me if virtual classes are taxable, sales taxable anywhere across the country? There probably is something. I just off the top of my tip of my tongue, I don't know that answer, but there probably is. And again, though, I would bet also that virtual classes are not sales taxable anywhere in the country. That's just my thought. Not
Well,
until
I've heard that there is some law that says if I earn a certain amount in a state or area, then I could be due sales tax for that area, for that amount. Is
Yeah.
that true?
Well, again, I think that's going back to, what I said earlier was if you sell a certain amount of taxable products into a state and you go over that threshold, then yes, you have to start charging sales tax. But that again depends on, is what you're even selling, is it taxable in that
Right.
state? I don't think it is. Most services are not sales taxable in states. I see somebody put in the chat here for you. You might want to check into it. Natalie
Right.
said about a website called Teachable. So you might want to check into that as well.
Sure.
Yeah. Anyone else have any questions?
It's not in the chat. It's not in the chat.
Yeah, if you go into the chat and scroll down to the bottom, Natalie posted there's also a service for business selling courses online called Teachable. So this is a really quiet group today. I am amazed. We have a good number of people here. So again, if you're looking for any kind of financing, check with your local SBDC. They know what's available in their geographic area. There are quite a few low interest loan programs, no matter where you're located at. So you may qualify for those. Commercial bank loans are kind of high right now because the prime rate from the government is high. So you're probably looking, 7, 8, 9, 10% or higher for a business loan, although there are low interest loans that you can get for like 6% or lower. So check into those. Also, if you're a business that can sell your product or service to the government, the SBDC has a government department as well that helps you sell to the government, or we also have a department that helps you sell internationally. If you're someone that has a new product, like a new mousetrap, and you need help getting it patented and getting it out there to the world, then we have a special department for that as well. All of these services are offered at no charge, by the way. Another service that the SBDC offers that is not well known sometimes is our environmental management program. So it's called EMAP, Environmental Management Assistance Program. If you're a business that has to deal with environmental regulations, then this program can make sure that you're in compliance with those environmental regulations, and they can help you fill out applications and do calculations that you might need done. I especially see like manufacturers using the EMAP program, but most businesses are regulated one way or the other by environmental issues. So just do a search for SBDC EMAP, SBDC EMAP, and you should find it online. If not, reach out to your local SBDC consultant about that. So as we're about to wrap up, and I'm not seeing any more questions, this is the time of getting your taxes done. Get in there as quickly as you can, get them filed. If you're not sure what categories to use to categorize your expenses, then do a search online for IRS Schedule C, and that will give you a form, a Schedule C form, and on that form, about halfway down, and is a bunch of boxes with different types of expenses, such as advertising, supplies, repairs and maintenance, rent, uh, um, car and truck expenses, and meals and travel and all types of different expense, insurance expense, mortgage interest expense for your business. And then part of that Schedule C, and we kind of mentioned it a little bit earlier on, is the home office expense. So if you have your own business and you're getting like a 1099, then you are able to do the home office expense. Again, you got to make sure with everything that you have the receipts for all of this information, but you can take the square footage of your home office and also the square footage of your entire living space of your house, and you're going to get a percentage when you take your home office square footage divided by your living area square footage. That's going to give you a decimal. You take that decimal and you multiply that times your total utilities expense, like your electric, water, sewage, garbage, and any other utilities that you have. You also get to take a percentage of your personal home mortgage. You get to take a percentage of your homeowner's insurance. You get to take a percentage of like repairs and maintenance to your entire house. That's about it. Real estate taxes, I missed that one. You can take a percentage of your real estate taxes as well. And that becomes a subtraction away from your income of your business if you're operating out of your house. Now, if you're someone that's operating out of a commercial space, that is your office. And especially if your house and your commercial space is a short drive away, and what does that short drive mean? I'm not going to put a mileage to that, but I mean, I drive to Clarion, where I'm sitting at right now, from my house, like a half hour. So that is a normal drive. I have people that drive 2 hours to their office in Pittsburgh, Pennsylvania. So, that's a normal drive. But if you have a physical location for your business, it's going to be a lot harder to write off your home office expense. Now, it's easy to do, but if you get audited, you're going to have a hard time proving that your home office space is necessary when you have a commercial space to go into and do your work. So even in my own type of business that I have a physical location, plus I have a home office that I work out of. I don't write off my home office because if I were to get audited, I just know that that's not going to fly because my business isn't really that far away from my house. And so I should be commuting to my business location and doing my work from there. Okay, I'm going to see if there's any last questions here. Okay, Natalie's saying, I agree. This is the best time to file taxes. Accountants have so much more capacity to answer questions. Yeah, I mean, accountants definitely, I might be taking it beyond even what you're saying, but again, my answers to you are based on what little bit you told me in a very short period of time. So be sure to talk to your accountant. Now, during tax season, they're probably going to be a little short with you. Okay. I mean, they'll schedule a meeting with you and such and answer your questions, but they're trying to get through hundreds upon hundreds of tax returns. And so if you want to have a non-tax related, help me out with my business type of meeting, you're best to wait until after tax season, the other months out of the year, and they'll give you more time then because they have the time. But with that said, with just general business related questions, if you don't have the money to pay your accountant, then rely on your SBDC. We are here to help you answer a lot of these business related questions. And outside of a quick 1 hour session like this, we are SBDCs are more than willing to sit down with you for an hour and learn about your business and help answer questions. And then we can correspond by email and that and Zoom meetings back and forth to help you grow your business. That's the idea of the SBDC, is to help you start, grow, and prosper with your business. Now, before I let you go, I do want to thank you all very much for coming to Tax Talk with Corry. I hope that you learned something. We will be back here next month, so keep an eye out for an email or check out our website, or check out the PASBDC.org's website. And ultimately, we try to keep it the same Wednesday of the month unless something comes up and we have to reschedule it to a different Wednesday. But we do have this every month. The tax tip is always different, and the Q&A is normally about 45 minutes long. So get writing your questions down, and I want to answer them to the best that I can. Otherwise, thank you all very much. Take care of yourself. We'll see you next month.
Thank you.
You're welcome. You're welcome, everybody. Take care now.